Hello, my name is Patrick Fordell. I'm an investment analyst, business analyst, and my friend Stefan from Sweden commented on LinkedIn when I made a video about the coronavirus and stock market crash that what am I saying, because his Finnish is not very fluent. So I thought I'll make this in English also for all my colleagues and friends and business associates, that the video, which was in Finnish, was made in February, and now we are in a little bit different situation already, or maybe not so little. I think the stock market has come down quite a lot since then. But today I actually woke up with the thought that what is the next step in this scenario that we are seeing. The economy is retreating, we see stock markets going down, airlines are carrying less and less people. Today Donald Trump made a decision that people from Europe, Schengen area, cannot travel to the United States. And the only hub that remains open is in England, so as far as I understand, you can fly from England to the States. So we are seeing this restrictions in people traveling, and the whole. I go back a bit, and the coronavirus started in China in a certain area, and it escalated there very rapidly, and China then closed cities and people stayed at home. And one of the first companies to make a profit warning was Apple, who couldn't get components from China to make telephones and other products. So that was one of the first companies that made this kind of statement. And a lot of parts are made in China for cars, for all types of manufacturing. That was the situation. We were in February. And since then, as far as the reports come in from China, they have now sort of gotten a control of the spreading of the virus. Now there's only maybe a few tenths of cases every day. So it will be interesting to see if China really can contain this virus or not. I think that to a certain extent it still remains to be seen. But then it spread to Italy and other parts of the world, and professors and experts say that it will spread throughout the world. And I made I studied it somewhat, and a virus like this can take up to a year or even more before it peaks and then goes away. So we have seen maybe only the beginning of the whole thing in the stock market downturn. Now the economies are subtracting, becoming smaller. Was that 17% decrease in input in China in, was it February? So in my previous video, we were in where the stock market still hadn't gone down that much. I thought that then it would be a good idea to sell the portfolio and maybe put 10 or 20%, maybe 10% of your portfolio, if you then have everything in cash, into a put option of that the market would go down. You would have. I'm not sure anymore if you can find a put option that will be relevant. But then again, so if we take the present situation, we see, of course, that certain stocks have gone down really a lot, like airline companies. And we are in a situation that you need to make an analysis of your portfolio or fund, if you have money in these places, that which companies won't survive. If a company goes bankrupt, then your shares will be zero worth forever. You'll never get the money back. So airline companies are one in a big risk, and banks might also get into trouble. So you need to check carefully what's in your portfolio. Still, it might be the case that could be a good idea to sell it and keep cash. I think we are in a situation when the classic cash is king is quite relevant. If you have a lot of cash, then you just wait out the coronavirus storm, and then there will be a lot of cheap opportunities to make a lot of money. So how do you, if you need to evaluate your portfolio and the companies in it, companies with a lot of debt can be troublesome. Of course, airline companies are probably the biggest risk at the moment. So it's a big risk to keep shares in airline companies, even if they go down a lot. I mean, if you get now, they've gone down, 50%, 70%, might still be an idea to sell it and keep the cash and wait. You won't see the airline companies going up in the near future. So if you evaluate the balance sheet of your companies in your portfolio, then what you look for is the ratio from, you take the assets minus the debt, and that's basically the basic value of the company if it makes zero profit. So that will be some kind of a bottom. If let's say a company has assets after debt of $1 billion, and the share price, the market value of the company goes to 600 million. Then if you buy the whole company with 600 million, you can you pay off the debt and you sell the assets and you get $1 billion. That's the principle why we will see that that's the basic level where prices can be. Of course, if you have a good company with like Apple or something like that, there is value in the company itself without this asset minus debt. But this is the bottom end of what to expect. But what I talked about today when I woke up was that if we see a continuing downturning the economy, where will it end? What's the next step? We are now seeing this market crash and all this, and so that's the current step. The next step, if the downturn continues, is that we will have a deflation where asset prices will go. Like if you own a house, the value of the house on the market will go down. No one is going to buy houses, and when this type of market stagnate, we will see a decrease in housing prices. That's then a deflation. There's too much goods produced that no one is going to buy them. Like cars, for example. A lot of people, they won't. Would you go to buy a new car today? Or will you wait until, the fall or next year? You still have your car, it works fine. You don't need really to buy a new one. You wait. We will come into a period where people will wait and stay at home and hopefully keep their job. And this means the deflation could be the next step. And what is then if you have a house and a mortgage, that can be a problem, because the balance sheet of the banks needs to have your mortgage and the collateral, which is the house itself, at market value. So your collateral will go down. You have a $200,000 loan, and let's say that your house is worth $220,000 now, and the prices go down to $150,000. Then there will be a gap in collateral of $50,000. And this is the problem in the bank's balance sheets, to get too much. It will decrease in value, the collateral, and that's not a situation where a bank wants to be. So we might see then a banking crisis in this way. So if the economic downturn continues, we might be in a deflationary situation in the summer or sometimes there. And then this scenario is possible. So it's good to have this in your head, what to do about it. How will you survive? And of course the good side is that if you have cash and you are in a good financial position, then when this virus is gone and we see the next upturn, there's going to be plenty of opportunities to buy stocks and maybe houses for a good price. But then, Stefan, hey, please subscribe and keep tuned. Then you get the next video. What my thoughts are on what's the next step. Thank you.